What's going on, everybody? In this video, I really want to stress, a few secrets about dividend investing that I think some people know, but not everybody knows. And they're insanely important when it comes to learning how to be not only a good dividend investor, but a great dividend investor. So we got a good amount of stuff to go over in this video. You know how it goes. I'll ask you enjoy this type of content, you subscribe to the channel, and you turn on post notifications so you don't miss out on any future videos. But let's go ahead and just get straight into it. This one's going to be a little bit of a shocker, but current yield, like current dividend yield, doesn't really matter to a certain extent. So what you do is you want to invest in companies that are going to give you a great yield on cost. Now, if you don't know what your yield on cost is, it's the dividend yield that you're receiving based on what you actually invested. So, for example, you might buy a company for a dividend yield of 1%, and that dividend yield might stay 1% for 10 years. However, because you invested in it when it was cheap, and let's say the stock has doubled, your dividend yield is going to double as well. You want to invest in companies, it could even more than double, okay? You want to invest in companies, for example, like Warren Buffett right here. Warren Buffett and Berkshire Hathaway bought Coca-Cola stock like almost 40, 50 years ago, if I'm not mistaken, maybe even 60 years ago. They're now receiving a 52% dividend yield on the amount that they've invested into Coca-Cola stock. He's doubling his investment every 2 years in passive income, which is just insane. Now, this says they have a current dividend yield about 2.75%. We can look right here. It's about 2.91%, which is an insane number. Okay, 2.91% dividend yield, yet Warren Buffett, because of his long-term impatience, is getting 52% because you want to invest in companies that are going to grow their dividend. Now, it's a little bit varying because you might be looking for income right now. You might need that income right now, and you don't have the time to wait. So maybe you should be aiming for current yield. But if you're a dividend growth investor, current yield does not necessarily matter as much as somebody who currently is looking for dividend yield. You want to get dividend growth. The next secret I kind of want to talk about is that patience pays. And this especially really applies to dividend investors, just because the key to success within dividend investing and having a good dividend stock portfolio, it's not just like making good investments, buying good ETFs, buying good stocks, and being consistent, putting money into your account every week, day, month, bi-weekly, whatever it is, It's also about being patient in the process, okay? You have to let your portfolio compound. You have to let everything do what it can, because dividend reinvestment, drip, and the snowball effect are 100% real, and you need to let them work in your favor. The longer you're invested, the greater the reward, potentially speaking, because a number of things. Like I said, drip, the snowball effect, when you think about it, if you invest in good companies, you will get a great dividend growth. That's huge. So here's just kind of, if you've watched my videos, you've probably seen this before. I stress this all the time. Going back to 1970, 84% of the total return of the S&P 500 can be attributed to reinvested dividends and the power of compounding. A $10,000 investment in a 60-year time period grew from $10,000 to $3.845 million when you reinvested your dividends and you were patient. And I say only, but without dividends and dividend reinvesting, it only went to $627,000. That's a massive gap, and that's why patience pays, because drip and the snowball effect are real. Next up is it's okay to sell a stock, okay? It's okay to sell stock that you quote unquote love. So let's talk about this. AT&T. A lot of dividend investors love AT&T, and this is not me hating on it, but it's just me kind of saying like the past performance has not been very well. And it's okay to sell a stock. Like everybody, I know a ton of YouTubers are like, oh, I love AT&T stock because this, because that, the new deal that's coming in. But you kind of have to realize you don't want to just be like emotionally attached because all these other people are emotionally attached. It's okay to sell a stock that you might love, because even if you sold right here, you would have gotten that money and you could have put it into investments that would have gained money rather than have lost all this money. And this is a 5-year chart. This has just been money bleeding for 5 years. And it's not the type of investments you want, and you want to create gains with your losses, Like I said, it's okay, even if you held it for a long time. Maybe you bought it back here, it's okay because you don't know It's okay to sell because you don't know how much longer this knife is going to keep falling and if it ever will recover. You're probably just better off taking that money and putting it somewhere else. The best investors are disciplined, and even if you're down 44%, it's better to be down 44%, take the loss, and move that money into where it can maybe get you a 5% return or 10, 30, whatever it might be, percent return, rather than letting that 44% return potentially turn into 50%, 60%, 70%. You know what I'm saying? Also, selling these stocks whenever they're down is a tax loss harvesting, kind of writing off on your taxes, which is a good advantage. But another thing I want to stress, the next secret is kind of that tax advantage accounts are a double win. So what I mean is you get a big win because one, you're investing. That's a great thing. Congratulate yourself. Be proud of yourself for investing, okay? And two, you're not going to have to pay all these taxes on, okay? Why would you give away your profits and dividends away when you don't necessarily need to? And this isn't me saying, oh, avoid taxes by all costs, by all means. No, I'm not saying that. I'm just saying, like, if you're going to make $100,000 that you earned and you have the ability to keep it, wouldn't you rather keep $100,000 rather than only keeping $75,000? You get what I'm saying? And the account that I use is a Roth IRA. Contributions are not tax deductible, but the thing that's pretty important is whenever you turn at least 59 and a half years old, you can sell all, like, let's say you have $1 million that you can do, $1 million in that portfolio, you can sell it right then and there, pay no taxes on it. Okay, here's just kind of like the things you need to know. There's no age limit for when you can open one. I mean, you have to be 18 at least. The only downside, you can't really sell until your profits are, unless you're at least 59 and a half years old. Sorry about the stutter right there. You'll see before then, you pay taxes and possibly penalty fees if you do withdraw the money. And the last secret is you want to be good at being a lone wolf per se. So for example, facts overrule opinions, and you need to get good at knowing the facts behind like an investment, a stock, and know exactly why you're invested in this company. Because so many people, there's going to be a ton of bears on the side of the stock investment, okay? A ton of bears will be there saying this stock sucks. You need to be good at going against the crowd if that's the right thing to do. You need to learn to be self-reliable on your investment making decisions, and also your ability to be consistent with your investments, dollar cost averaging. Learn to be good at doing things on your own. Like I said, don't listen to the media. It's okay to like read it and see what's going on, but you don't want the media to overrule what you strongly believe in unless like you see it from the media, you do your due diligence, and you see that things have changed, then it's okay. But a lot of these headlines are very deceiving and can change your ideas. You get what I'm saying? You want to make sure you're good at being a lone wolf and doing things on your own. Okay? You want to be sure that you're certain that you're correct about your investments. But those are the main secrets about dividend investing that you need to know. A lot of people kind of skip over those, which I think are very important. But that's going to wrap it up for this video. So if you enjoyed it, make sure to subscribe to the channel, turn on post notifications so you miss out on any future videos. Check out M1 Finance if you haven't already. Once you deposit $50, we both get $50 free money. Okay, it's insane the promotions that are going on right now. Check it out before they expire and it changes. But again, thank you for making it in this video. Always like to hear your input. Leave a comment below, and I will see you at the next video.